Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and we are surrounded by delusional central planners, as if you didn't already know. It's pretty obvious, but going back to 2007, we can find Ben Bernanke, for example, saying that 2008 will see growth in the economy, and then I believe earlier this year, Janet Yellen saying that we won't see a crisis in our lifetime, and now we got Kudlow making similar remarks, and as this article from Zero Hedge says, stocks ignore Kudlow's China threat warnings, rally on recession in sight. And as it goes into, the U.S. equity market is surging pre-market as it ignores all the warnings that the White House chief economic advisor, Larry Kudlow, just issued about the China trade war, and focuses instead on his comments that there is no recession in sight. Specifically related to the recession, Kudlow appears to be towing the same line as the Fed. Don't sweat the yield curve, somehow proclaiming that you should ignore the 2 to 10 year curve and focus on the 3 month to 10 year spread. And so, you know, we get this a lot, this idea that we can judge fundamentals. We get that on both sides. We have people that talk about the inevitable dollar crash, saying that it's going to happen on this day of this year, maybe this minute, and it's just irresponsible. At the same time as you get these central planners saying it won't happen until this year, so don't worry about it. And I think we have to understand that fundamentals are off the table due to the level of manipulation in the monetary system as well as the market, so you cannot put a date on it. You just can't. It's irresponsible, but we know the crash is inevitable. And as this article from Business Insider says, the three men who steered the U.S. through the 2008 crash think we're forgetting lessons from the crisis. Well, isn't that convenient? Henry Paulson, Timothy Geithner, and Ben Bernanke have warned that the lessons of the 2008 financial crisis are in danger of being forgotten. Paulson was head of the Treasury when the crisis struck in 2008. Geithner took over under Obama, and Ben Bernanke was Federal Reserve Chairman during the crisis. The trio said that the rising U.S. budget debt, a dysfunctional political system, and a drive to loosen reforms put in place after 2008 could combine to endanger the economy. And I quote, "It is important that people focus on the lessons. We are not sure people remember everything they need to remember," said Paulson. And it's just so interesting that these guys, they talk about we have to learn from the past, but then they just completely repeat the same old central planning, quantitative easing, fractional reserve lending, insanity, and spending over and over and over again. John, what do you think about this?
Well, I think Ben Bernanke might be equating to what he said in 2007. Don't say that there will be no recession or no problems, months before it's going to crash. That probably be the best lesson to learn from Ben Bernanke. Of course, they didn't mention that in the article at all. And what you got to remember is that these central bankers, they are just there in place, and they run the economy, they run the world together with their banker friends that own their shares in the Federal Reserve. And what you got to understand, guys like Paulson, for example, he was out pushing collateralized debt obligation for the Timberwolf shares, together with some other banksters. At the end of it, he was in Russia trying to sell them at the point where they kind of knew that it was going to blow up. So the biggest crooker, Hank Paulson, is of course a Goldman boy, and he's probably one of the biggest crooks throughout 2008, because he was actually pushing some of those investments onto other countries. Meanwhile, he knew what kind of garbage they were, and he was brought in, of course. They always come in from these banks, the treasury secretaries, to save the economy because they know what they're doing. Well, they don't. Yeah, they totally know what they're doing, but they don't give a crap about the populace or the economy. Yeah. They just want to save their buddies, the banksters that are over there running the economy.
Yeah, totally. And, we're seeing the return of the collateralized debt obligations, mortgage-backed securities, reverse mortgages, credit default swaps. The insanity of what led to the crash in 2007 with the housing market, massively bubbled up housing markets throughout the United States, Canada, elsewhere. And then we also see at the same time this continued banking crisis. So the banks are still insolvent. They're more insolvent. Their cash to deposit ratio is unthinkable at this moment. Most of them have like 0.5 50% or something like that of deposits covered in cash. It's just unthinkable. It's ridiculous. It's insane. And anyone that's invested in anything like that should be looking at that with big red flags. But with that said, I mean, we're propping up a dead horse here. The vast centralization and manipulation, you keep just pushing that up, hoping that, you know, you can draw out the problems until later. But in reality, you're creating a bigger problem later. And when it comes down, it's going to crush us 10 times harder than before. And that's what leads me into this article quickly from the Associated Press, because I thought this was interesting to tie into all of this, is that Trump slams rate increases by independent Federal Reserve. A very interesting title, by the way, for Associated Press. Wow, really?
It is.
Yeah, and as the article goes into, President Donald Trump on Thursday cast aside concerns about the Federal Reserve's independence, saying he was not happy with the Fed's recent interest rate increases. Trump told CNBC in an interview, "I don't like all this work that we're putting into the economy, and then I see rates going up." Last month, the Fed raised its benchmark rate for a second time this year and projected 2 more increases in 2018. Its rate hikes are meant to prevent the economy from overheating and igniting high inflation. But rate increases also make borrowing costlier for households and companies and can weaken the pace of growth. In particular, the Fed's most recent hikes could dilute some of the benefits of the tax cuts Trump signed into law this last year. And I want to also note that we just recently reported the inflation in the United States hit a 6-year high recently. And if you look at John Williams' shadow stats online, you can look at the real inflation rate instead of 2.9% of about 10% if you look at the 1980s chart, which is a pandemonium. That's insanity. And everyone should be very, very much concerned, because this is an inevitable result of all fiat empires, all central planning. But with that said, John, I want to go to you for this. We have Donald Trump raising concerns. You know, a while back ago, he said Janet Yellen was doing a good job during the election. He was attacking them. I don't know where he is, but ultimately, I do know that presidents don't have much of a say in the economy. So don't blame Obama, don't blame Bush, don't blame Trump, don't blame any of them, because they are just willing puppets on the, as a sideshow to this madness of central planning pushing people into debt servitude. But John, what do you think about Trump's recent comments about interest rates going too high?
Well, first of all, he forgot one big thing in there. It's the government. It's the government that has so much substantial amount of debt that they are screwed if interest rates goes up. That's the major worry that you should look at here. Of course, in the United States, it's not that horribly terrible with some debts. There, of course, is the auto loans, the student loans that are really bad in the United States. But then they are faring quite well compared to some other countries. Like look at Canada, China, you look at Norway, all the socialist countries, interestingly enough, most of them have substantial amount of debts that they have accumulated, way more than the United States has on the private sector. It's getting to that bubble level that's really dangerous. And of course, he's saying that the economy is getting stalled by it. Well, the economy is just trying to figure out like what actually is the price of money in the first place, and the problem is that the central bank is trying to manipulate it downwards with you see the yield curve. We were talking about the yield curve. The 2 to 10-year yield curve right now is at 25 basis points, and then if you do the 30 and 10 that guys like Gregor Mannarino is talking about, you're down at 12.5% when I looked at it this morning. So you're seeing it's very like kind of close and shortening. I've been watching it over the last couple of months, and you see like almost every week it like gets flatter and flatter. So it's really just telling us that people are trying to figure out like what's going on in the economy, and they're trying to figure out a real fair market value of all this debt that are accumulated all over the world, and it should be so much higher than it is right now.
Yeah, absolutely. And I mean, all fiat currencies eventually revert to their true value of zero. They always have, they always will, going back to 1024 AD in China. And I mean, so they say, it'll happen, it's in the future. We don't know when, but it's in the future at some point. And but it's not it's a bit down the line, right? It's not going to happen right away. And yeah, of course, you can't put a date on any of that. It's insane. But at the same time, I have to mention that it doesn't matter when it happens. It could be in 10 years. I don't know how, but it's more likely in the next couple years. Still, I can't say, because you just can't put a date on these kinds of crises. And that's why we should just be looking towards preparation for this issue. Instead of wondering when it's going to happen, be overly prepared rather than underprepared. Though I do want to make a quick point before we go into that this interest rate hike, we're constantly seeing the interest rates pushed up and up and up and up. And it seems to me that it's more out of desperation than anything, that they know between 2008 and 2012, they dropped interest rates 5.5% to aid in the crash, more centralization to prop up the problems of centralization, of course. And by doing that, I mean, yeah, it put it off for a bit longer, but it's going to be much worse when it comes down. And they will have to lower interest rates much further. So they don't want to go negative. They want to stay away from that as much as they can. And they know that they're running out of time. So they want to push it into a global cashless society, like we've seen testing grounds for in China and India and Sweden and Australia and parts of Canada. And M0 looks interesting too if you look at that. I mean, if you look at all these places, there is a testing ground for a centrally planned cashless society, and it seems to coincide very often, as in the case of Sweden and a few other cases, with negative interest rates. And the idea of negative interest rates is just so absurd that it's laughable, but also people should be looking at it and going, oh man, this is not going to end well. Exactly why we have to be prepared. I'll go into that a bit in a minute, but John?
Well, it's very laughable. I actually had the chance to speak to a whole bunch of small business owners today, and they were concerning the same kind of things. What is happening in the economy is that people are getting strangled by death. They're starting to, having issues with their businesses where there's so much, taxes and everything that is in place. And that's because of the big blow to government. And the problem with the big blow to government is that they have so much debt. And the problem with that, again, is that when you raise the interest rate, well, their cost of borrowing money is going to go up at the same time. So now you're going to have, suddenly you're going to have the U.S. government paying $2 trillion and running a $2 trillion plus deficit because they got to pay the interest, just the interest rate on the the debt that they have accumulated. And other countries are just like, look at Canada and other countries that are just massively by getting into debt. Their government are complete run amok and insane. I think what we're seeing with all this debt run up in, especially in governments, Josh, is that you're seeing the end of a government cycle, I call it. And you see this throughout history where you end up with a small government. Initially you want to have, a libertarian type of government. It's like, yeah, we'll have somebody, look after the roads maybe, and then we'll have, somebody. Oh, maybe we should have somebody doing the fire departments. Maybe there's some policing. It would be nice for the government to take control. And just over time, it's just incremental. It just increases and increases, and people in the government wants job security, so they're trying to make the government bigger and bigger every year. And it's just a death cycle. Over time, look at 50, 60, 70 years, that government that was tiny at the start, or 100 years, whatever cycle it was, suddenly you sit with a tyrannical government, and that's where we really feel it right now. Look at what happened in the UK with Tommy Robinson there. That's a truly tyrannical government when they come after free speech, they come after, protection of weapons. I was showing Josh an article on the Rohingyas and how I think it was Amnesty International actually took away blunt and dangerous objects for them right before they started killing them one by one.
Yeah, we've seen that in a lot of countries before as well. And, just on that point, Canada as well, the hate speech laws, the craziness of the the UK, Britain, the free speech zones that we saw coming up years ago, and the hate crime law. It gets out of control where people cannot say what they mean, people cannot defend themselves. And going into what you said previously there, John, you can have a big tumor in you and get rid of 95% of it, but it'll continue to grow. You have to get rid of all of it. You have to you have to abolish that thing from being, and you can't just cut down 95%. Yeah. So, and that's just the problem with coercive collectivism, is one way or another, it will always grow. Even small government begets bigger government eventually, and there are better ways to go around it. And you mentioned fire department policing and roads, very simple to do at a free market angle, and historically more efficient. And you should check out Edward Stringham's book, Private Governance, for information on that. Very, very good work he did in researching throughout history these kinds of issues. Also check out my interview with Tim Moen, the leader of the Libertarian Party of Canada, on the subject of fire departments, he being a paramedic and a fireman as well. But anyway, there's a lot of things that we could go into there, but I want to wrap it up kind of talking about the solutions, because that is the most important part of these videos, which is that you as individuals need to be educated with the information that we provide, and go and do your own due diligence elsewhere. Don't believe everything we say. Just go and look for yourself. It's very important. And then on top of that, you need to feel some form of ambition with actually knowing what's going on with the world around you, and be able to be self-sustainable, independent, and free of the state, free of the banking system, free of the coercion of these massive collectives or organized crime rackets, and make sure that you can take care of yourself as an individual, not a giant collective that you coerce at the point of a gun. Majority, minority rule, who cares? It's you rule. That's what it should come down to. And I think a good example is food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. Of course, gold and silver have been historical wealth insurance, protect your purchasing power. And then cryptocurrencies that have sound fundamental values, do your own due diligence on that as well, of course, because there are a lot of bad ones out there. There's a lot of good ones out there. Make sure to look into them, make sure you understand them. Decentralization is key to overthrowing this massive complex, but of course, this is our opinion and not investment advice, because of course it comes down to you. We should all be doing our own research. It's so incredibly important. I can't state it enough. John, bottom line?
Well, bottom line, I was thinking about my speech today in meeting with these small business owners. What we were talking about, because they were asking, what is the solutions for us as small business owners to take care of ourselves? And I just want to share what I thought was a good idea, is just for our small businesses and communities to get together and start working together, do business with each other, promote each other, and make a vibrant, a small community, instead of all these massive conglomerate businesses, the big corporations that have taken over because of using government to gain power and control competition. So I think small businesses need to get together. They need to really work as a team in order to try to at the point when things are coming apart, you really need these people in order for us to survive, because if we don't have them, the government is going to step in and make us even worse slaves than we are right now. So we need to really help local businesses if they're good. Of course, if they're terrible, then screw them. But it's a very important.
Individual demand will definitely decide.
Yeah, the free market, right? So it's so important. But yeah, it's important that we try to make kind of a community where people are working together and understanding. Because if we are not, then the government has been able to divide and conquer us. And look at what's happening in Venezuela, where they were so well prepared to divide and conquer the populace. They are in full control, and they're completely demolished the country and making people into slaves.
Yeah, and of course, when you regulate these big businesses into prosperity, you regulate the small businesses into oblivion, and you do the same with taxation and with inflation and with central banking debt. We're getting attacked from these organized crime cartels from all angles, and it's up to us to break free from that and understand it. And with that understanding comes action, and that action comes individual freedom. Absolutely. Personal responsibility is the hallmark of freedom itself, after all. Thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized by YouTube as they bring in the ADL to flag all of our content as hate speech. Also check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also check us out at Steemit at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in cryptocurrency, Steem that is. So don't forget to check us out there and find us at Anarchapulco 2019. I know it's early, but this is such an exciting event coming up with Ron Paul, Judge Napolitano, David Icke, Larkin Rose, Jeff Berwick, all the usual characters, and it's going to be amazing. So we hope to see you there. Make sure to check the link for Anarchapulco below and use promo code WHAM to save as much as 15% on your tickets. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.